Welcome to the 2025 Economic Preparation and Depression channel. Thank you for joining me on this March 18, 2025, this brief Tuesday edition. Please be sure to subscribe, hit that like button on the way in because, ladies and gentlemen, the videos are being suppressed, but truth and financial interpretation will always win in the end. I appreciate everyone's support. We're going to be talking about briefly gold prices going up to record over $3,000. Price of precious metals. Silver's along for the ride. This is above $33 as we speak. As well, the Federal Reserve Bank has got some important information to get out to you on Wednesday in terms of what possible rate cuts, what that can mean for this economy, and more layoffs in the private sector. Morgan Stanley going to trim the fat a little bit on its investment sector. Let me know what you think in the comments about that. Are you seeing more companies and businesses trimming the fat here in terms of operational costs and expenses here as we head toward this spring and hot summer of 2025? So right here we have gold prices according to mining.com rise on Middle East tension, U.S. economy concerns. As you know, gold has been a preserver of wealth. It's not something that's going to make you a lot of money in the short term, at least, but it is a preserver. It rose to a record high above $3,030 an ounce as escalation in Middle East tensions underscored its haven appeal, as I just said, and investors weighed data that fueled U.S. economy slowing down. So the economy train is slowing down. The good news is that we're blessed. Many of us still have, a roof over our heads, a car to drive, family, friends to help us out. We take a lot for granted. We're still blessed. We're still living life as, we should be right now. But the U.S. economy is showing signs of weakness. And I think all of you guys can feel that from everything being up in prices, 25% from the food, gas, the water, utilities, bills, homeowners insurance, everything is going up, but our paychecks, but we're blessed to still be able to get a paycheck, whether that's independent or small business or, working for somebody. Either way, we're blessed. So now with gold going up, this is something that's very interesting because gold and silver typically hadn't really made a huge move. This could be the year that gold makes a move to keep going up this year, underscoring its value versus, say, Bitcoin or any of the other altcoin, crypto coins. This could be gold's chance to really stand out here. Just saying something being neutral here as well. But the Federal Reserve Bank will update its rate projections on Wednesday, as I mentioned before, according to CNBC.com article. Here's what to expect. So they expected to hold rates steady, as I told you, that we're not going to see any drastic rate cuts here from the Federal Reserve Bank. Now, they still could maintain that outlook for two possible rate cuts. Now, if they do two possible rate cuts, this is likely to happen after September. So sometime in October, you'll get your first rate cut. And then maybe in December, if you're lucky, before December, like Thanksgiving time, you'll get that second rate cut. And obviously, these will only be 25 basis points. I don't know if that's going to do much to control what we got going on here. This double-headed monster of inflation going on and also, stagnant wages. So we'll see what happens. But everything seems to be on the table, according to this CNBC article, by Jeff Cox. He says that Chair Jerome Powell and his colleagues in recent weeks have advocated a patient approach in which they do not need to be in a hurry to do anything, but their hand might be forced to do something here if this economy gets really bad. And President Trump may come to them and say, look, we're either going to need some type of stimulus check from Doge, that's been on the table. I've seen a lot of articles on the internet about that. Or if we don't get a stimulus check this time, it's possible that they may have to do something about, lowering some of the taxes on businesses, small businesses, or on personal consumption goods. So we have to wait and see what they decide to do. But just keeping close eye out for that as we head into late spring and the summer, sometime May and June. Keep a close eye out for any talk of any type of stimulus, austerity measures coming from the other departments of like Doge or some other department other than the Federal Reserve Bank itself. Now, we'll wait and see what that happens. But that's one of the things. I personally don't think there's going to be two rate cuts this year. I think there's going to be one rate cut this year and one holding it steady, holding the rates, whatever it is, steady. Unfortunately, this is going to cause the inflation to can go wild again, and it's going to cause the stock market to tank a little bit, maybe possibly by 20%. Not that it doesn't matter, because on the street, prices have already gotten out of hand. So we'll have to wait and see what they do. But Morgan Stanley and the Routers.com, interesting today, they laid off about 2,000 employees to trim costs. Now people say, oh, it's not, the end of the world, it's only 2,000 people. But still, that's a lot. That's a sizable percentage. 2 to 3% of the company's workforce here, Morgan Stanley, here in New York, Manhattan there, as you can see, people walking. That's a sizable portion. They have more than 80,000 employees worldwide at the end of 2024. The layoffs were not related to the current market conditions, the source said, but the bank's move follows a string of job cuts by Wall Street lenders in recent weeks as they prepare for an uncertain economic environment. And this is key right here, ladies and gentlemen. we're in uncertain times. So one day, you may wake up and everything is, your bank accounts, your investments look good, and real estate, you got rentals, everything is good. The next moment, you're trying to sell stuff and liquidize. So you want to be in a situation where you have liquidity, because remember, on the national level, on the corporate level, remember we print up all this money for the COVID thing, right? The COVID-19, and we also print up a lot of money for the to get through the pandemic, and also to get through the economic crisis back in '08 and '09, right? But now this is an environment where we have too much money in the system, but not a lot of that money right now is liquid. Liquidity is drying up in these small and medium-sized banks, and you're going to see a lot of that too. You're going to see a lot of changes with banks merging and closing. You're going to see a lot of closing in retail stores that we've seen before with Forever 21. A lot of stores that won't get anything. Now, people may say, oh, it's only because the online is taking over. Yeah, that's partially true. That's 50% of it. The other 50% of it is that they can't get liquidity. They can't get the business credit loans, okay? They pay their staff, to pay the operational costs, the loans on equipment, the depreciating equipment, the loans on all kind of stuff, the leasing space. So that's the other part that many people don't talk about. Yes, it is part that Amazon, it's true that Amazon and Walmart and online and Target online or whatever killed a lot of the retail box stores that we have, but it's also true that we're going to be dealing with the situation where they just don't have the liquidity. That's the name of the game. So this is why I stress to you guys, try to have something outside of the banks, outside of the system, and also keep back a lot of food, water, basic hard tangible goods. That is going to become paramount as we get deeper into this recession, because remember, this recession is not just going to be a one-time thing this time. Even our President Trump said prepare for a little bit of uncomfortability as we make this transition, because obviously the tariffs are going to have an impact on us, but it's going to take time. We won't feel it until later on this year, once again, Thanksgiving, Christmas, and into next year, because it takes about 1 to 2 years for all these changes to come in effect and really feel it on the streets. We're feeling it now, but I'm saying really feel it in terms of the prices going out of control, and in terms of good paying jobs being kind of like scarce in all 50 states and not just in the hot spots that we typically think of. And so that's why I always stress it's better to have a plan than have no plan at all. And no one's going to be prepared for everything. Don't believe all these channels that say, oh, you're going to be prepared. No one's going to be prepared for everything, because, we just don't know. It's just a lot of uncertainty, but we can prepare as best we can using our God-given talents and abilities, and our family and our friends and our cohorts together. If we come together, it'll be okay. But in the meantime, like I said, continue to watch out for those news that's going to be coming out this week, and we should be okay. The earnings come out on Thursday, as well as job report. I look for a net gain of jobs, but only by maybe 5 or 10,000 net gain of jobs. We'll have to wait and see. So basically flatline. Let me know in the comments what you think. Do you think the jobs report on Thursday will show a drop or a change? Let me know in the comments. Take care, everyone. Blessings to everyone. Thank you for listening. Once again, please hit that like button and subscribe button, because people are saying they're not getting notifications or anything. So just let me know, and I'll be able to change that. Okay, take care.